Well, hi everybody. This is Will Cutler with Defender Capital Management. Today we're going to be going over the $50,000 buy of Fiserv that the club made. The initial reasoning for our buy was that Fiserv was undervalued versus its own history as well as its peers, the mission-critical nature of its infrastructure, the scalable moat-protected growth opportunities that the company sees, and a low entry point with strong upside. So a brief company overview of Fiserv. Was founded in 1984, headquartered in Milwaukee, Wisconsin, employs over 38,000 employees. Michael Lyons is the CEO. It has a market cap of around $70 billion. Revenue this past year of just over $21 billion and a PE ratio of 20.5. Some of the main competitors that Fiserv has: Fidelity, Jack Henry, and Global Payments. While they do provide somewhat different services, they do compete. As you can see, Fiserv's PE ratio is well below Fidelity's. It's also below Jack Henry's. And Global Payments does have a lower PE ratio, but as we go through this presentation, you might see why. As you can see, revenue is higher than all the other competitors by a factor of 2. And as you can see, the other ratios there as well. So Fiserv's business model is divided into 3 segments: merchant acceptance, financial technology, and payments and network. Merchant acceptance would be the point of sale systems such as the Clover. The financial technology, Fiserv builds and provides the financial infrastructure that the banks and the financial institutions don't necessarily want to build themselves. It's the hardware, the software, and just the system that runs within the institution itself. The payments and network are more the behind the scenes, the plumbing, the infrastructure, the clearing of transactions, and so forth. Fiserv's numbers, as you can tell, the current PE ratio is 20.5, with a 10-year average of 38.4. So again, very undervalued versus its history. The Clover revenue is $2.7 billion. In 2025, it's projected to be $3.5 billion. So that's a huge revenue growth driver for this company. Total revenue is $20.5 billion. Debt to equity is 1.09, so somewhat healthy debt levels. Return on equity is 12.47%. Net profit margin is 16%, and this has been consistently rising. As you can see, the PE ratio spiked around 2021 and is back down, and then the revenue has continued to climb.
All right, so getting into some analyst expectations, here are 2 price targets that we're looking at. Both right now, the current price for Fiserv is very much on the low end, as we see the average right around $185, and currently it's trading just below $130 a share. So from that perspective, analysts really project that this stock has potential for great growth. Moving into some SWOT analysis. First of all, the strengths, as we have reviewed some of these. This first one, the mission-critical infrastructure, we've touched on that. And as Will was saying, there's a lot of customer loyalty and dependence on Fiserv technologies and financial transactions. Next, we also have recurring revenue streams that Fiserv generates and proven mergers and acquisition executions, such as First Data. Some weaknesses include somewhat elevated debt levels, a slight slowdown in some of their key segments, and then a high customer concentration. Those customers that do depend on their services are most of their business is from a few key customers, and so losing just one of those customers and banks is a huge loss to the company. All right, so looking into opportunities in this analysis, first of all, Fiserv is well positioned for small businesses and merchant, and as those grow in the economy, Fiserv also is able to service those companies. And then also with the introduction of the stablecoin, which is backed by the US dollar, that is an opportunity for the company. And another opportunity is AI and data monetization. And so this is an AI tool that Fiserv has developed, essentially speeding up payment transactions and reading the documents to really make the transfer process more efficient. Some threats are competitors. We like Square, so the Clover system that Fiserv has, a large competitor is Square. They've had some regulatory issues over payments, currently with a lawsuit, but we expect that lawsuit, which was for overinflating some projections, we expect that to be resolved pretty promptly in this industry. And then economic slowdowns tend to reduce transactions. All right, here we have our DCM Excel valuation. And on the left here is some of the descriptions for each of these projections. And as we can see, most of these are showing that the stock is currently trading at a discount. The only one that isn't is projected cash flows. And so using our model, we can see that Fiserv is trading at a discount currently, just as we saw with some of those analyst projections. So some key points just to review for Fiserv are the mission-critical infrastructure, the scalable and large moat-protected growth, and then a low-price entry point. And so for these reasons, we submitted a buy recommendation of $50,000 of Fiserv with a target price of $190 in the next 3 to 5 years. Some things to consider that went into this recommendation were stable earnings growth, and expanding market share with Clover, potential for international presence and growth in Europe and South America, a customer reliance and loyalty on Fiserv's products, and then a low current valuation that is potentially oversold. And the club decided unanimously to put this buy through. And so thank you for watching this DCM presentation.